Hey everybody, I just want to make this video to discuss NIO and just share my general views on a few situations revolving around NIO. Not financial advice, please do your own research. This is just my opinion, um, nothing more. Please, at best, it's a joke and do not take anything I say seriously. This is just my opinion. Please do your own research. Thank you. So I wanted to go over this NIO stock and share my opinions and views because as an early investor in NIO and Tesla, or just a retail investor in general, I always try to look for opportunities in the markets, especially with turnaround plays and beaten down stocks or just finding value in general. So to me, you know, a company like Nvidia it's very good in terms of the stock, but it doesn't really make sense to me why it's so high. It's because it relies heavily on the Chinese consumer base and the Chinese economy, and it also relies on Taiwan. So if it's like if Nvidia, for example, relies on Chinese revenues from anywhere from 20-30%, um, then if you're gonna have a trade war of some sort, it's not really good for the company itself. So I think a lot of these things with China and trade, U.S. relations, they really do matter, but there are bigger things that should be discussed more, um, as of right now at least, and that is the interest rates for the Fed. So when we saw the interest rates cut by the Fed, whether it be because of COVID or not, um, anytime you have lower interest rates, okay, when you look at interest rates like this, now I understand 5% is the norm relative to our past 50 or so years, but as of recently, and ever since '08, clearly interest rates enable in order to be sustainable for our economy, the interest rates need to be low. Like the new norm is around zero, like a little bit above 0%. So, in my opinion, with how interest rates work nowadays, it's a very complex thing. Especially because how I look at interest rates, it's not just about domestic consumption or domestic production. It's really about how other countries interact with our interest rates, especially when they take on our debt, they buy our treasuries and things like that. And so it's really important that you consider these things because it makes it much more. It encompasses much more than just like the small micro things we see at a domestic level in the United States. One example would be like, okay, if we lower our interest rates in the United States, this could allow for China to, ease money supplies, ease their money as well, in order to, maybe potentially lower increase the value of the yuan versus the dollar, which could boost up their balance sheets. It could boost up their values, their purchasing power, which could help companies like in China in general, like NIO, which is good. So, when you look at these types of things, I think it matters way more. Just Fed interest rates and the Chinese yuan, especially when it comes to a company that is heavily traded by the U.S. markets and something that's really dependent on interest rates, unfortunately. But I don't want to get too much into that because I probably will make another video to share more views on how I feel about just the economies in general, trade and things like that. So I don't want to get too much into that, but I would look at those two things to get a better understanding of why I think that we will see something similar to this time. Because a lot of the views I have are really speculative as well, so they may not even, they're just my opinions, just my assumptions or theories. So yeah, okay, so I'm someone who bought around here, okay, so that's why maybe my view on things is a little bit more optimistic. And I'm sorry guys, like I know a lot of you guys have probably, not all of you guys, but some of you guys, a lot, have probably bought up here because as the analysts are telling you to buy, and the price goes lower, the analysts are selling off. All the banks are selling off, all the hedge funds are selling off, while retails are holding the bag. And don't worry, you don't have to feel bad if you're that, because this is generally how a lot of people have been affected in growth stocks and Chinese stocks, in companies with weak balance sheets or companies that are not profitable, things like that. So don't worry, you're not the only ones. It's a large portion of retail investors. That's why they say retail always holds the bag. But as an early investor in Tesla and NIO, um, you know, it's always I always try to do a contrarian point of view, a contrarian take. So I don't like to buy things that are already running up. I like to buy things that, especially when it starts getting frothy. I like to buy things when they are really low, in my opinion. But to go over a few things as well, just to build a better framework of how I'm thinking, I will probably make a longer video, unfortunately, to describe how I'm thinking. But yeah, I think we need to understand, like, when did the Fed cut interest rates and how did that affect the stock market in general, right? So you can take a look and then try to find the correlations with that, because we are in an economy where, yeah, it's everything's sort of a bubble and things don't really make sense. But and there's just so many things that are interconnected, right? So if you want to figure out why things are the way they are or predict the future, you need to build your own framework of like a macro to micro economic and social and political kind of framework, and then decide where your company's going to be and how, whether it's going to benefit or not. So looking at this company like Nvidia, yeah, I mean, I would never buy this stock at these prices, mostly because like the market cap is 2.25 trillion, and the revenues are substantially lower than that, and 20 or 30% relies on China. Yeah, it's just not really worth it with all the way with how both countries are handling their trade war. But companies like Nvidia or Meta have definitely held up the US stock market. And it's important because even if like a handful of stocks out of like 2,800 in the S&P 500, not S&P 500, but in the New York Stock Exchange or more, just because like a couple handful of stocks are holding up the entire portfolio for retirement folks, that doesn't mean like the overall stock market is doing good. Like a lot of the stock market is just doing terrible right now, and a lot of people's investor portfolios are just doing terrible as well. So don't take it too personally. It's just, when you look at things like the Russell, for example, like this is a sign that a lot of small cap companies are just not doing too well. The Dow, for example, it's reached all-time highs, but a lot of the companies within the Dow or the S&P 500 or the Nasdaq, like they just haven't been doing too good. Now some have, right, like the Magnificent Seven, but that doesn't reflect the overall health of the stock market. So yeah, if you actually look individually at each company within these indexes, they're not, some of them are doing really good, some are doing okay, but a lot of them aren't doing too well, and a lot of them are just astronomically high. So, and those are the ones that are really pumping up these indexes, which, you have a lot of Americans who rely on bubbles in order to sustain their retirement funds. So it's a real balancing act with the Fed to make sure we have social stability along with not breaking the backs of the working class, while also trying to fuel our debt-driven economy. So yeah, you just, I would suggest doing a lot more research on these types of things, because I don't want to make a video just discussing this, because this was supposed to be about NIO, so I already went on a tangent. So yeah, my whole point of that is that, don't worry, there's a lot of companies that aren't doing too well. It's not just NIO. But yeah, I'm kind of curious about if the Fed cuts interest rates and the Chinese yuan rises in value, if growth stocks, if Chinese companies will finally have their turnaround. especially because yeah, unfortunately, even if these companies are doing pretty okay and they're projected to do very well in the future, you in the short term, traders and things like that, they may want certainty. So I think that if the Fed does cut interest rates, it'll be really good for Chinese stocks. It'll be really good for growth stocks, especially because the yuan has not been doing too well in the past 10 years. Yeah, it hasn't been doing too well. It seems like the yuan versus the dollar has meet all relatively lows. But when looking at the Chinese yuan versus the USD, I would really look at the Hang Seng and the Chinese stock markets in general, and then see like, okay, is there any correlation with its increased import performance here, and whether or not we see a trend upwards. I do. I personally think that we're going to be trending upwards, just because, again, the Fed. I do think that the Fed's going to be cutting interest rates this year, which will, allow for Chinese purchasing power to go up as well, and the Chinese yuan to go up in comparison to the dollar. And I will probably make another video explaining more about my views on this, but while Janet Yellen is in China along with a bunch of American CEOs, which in my opinion have a lot of power, just like our own president, just like the Fed. Both of our economies are heavily reliant on each other, but I would argue that the United States is much more dependent on China. And I will probably make another video on that too, but to me it's all just a waiting game at this point, because we can't really predict when that's gonna happen. But yeah, so interest rates are very complex. It's not just about domestics, it's also about international too, because, well, it's an international financial system and we're all linked together. But yeah, I think that as the Fed lowers interest rates this year, we might see like a huge, like, it'll probably be the way we climbed up will probably be much slower than how we go down. And I think how we go down is going to be substantially faster. It'll be like a snowball effect. And I don't want to get too much into why I feel that way, but it's a very complex nature with the US financial system. So hopefully we see the United States and China work out much better. I don't think that the United States actually has leverage over China, though, because just because the stocks market in China is doing really poorly compared to US, that doesn't really reflect the health of their economy. It really doesn't, because they own the means of production. So yeah, when you look at that, yeah, it doesn't. It's just the way the economy is structured. So it's really hard for me to make these videos because I don't really know how informed my audience is, or if they've ever been to China before. So I feel the need to always like go on tangents and explain my perspective even further. Otherwise I would just go rapid fire on this. But yeah, I think this is going to be a good thing if we see the Fed cut interest rates. I think it'll definitely help Chinese stocks, just in my opinion. Looking at the Fed dot plot here, it seems like, yeah, we're going to be dropping rates pretty fast, and by 2026 we're going to be maybe a little bit above maybe around 2.75, but I do think that, look, these are pretty fast drops, and I think it's going to be faster than this in my opinion, just because the way of the cascading effect once you drop interest rates. And we really do need to do that, because at a domestic level, a lot of these companies are going bankrupt, not just like from small, micro, medium, and large cap stocks, but these companies in the United States don't have the same access to capital that maybe a Chinese company does. They don't have like as much government stimulus. They do, but the way it's structured is much different. So like I know a handful of micro cap stocks or small cap stocks in the United States, in my own personal city, for example, that really need interest rates to lower down. Mom and pop stores, companies that employ around 100 people, like these companies really need the Fed to lower interest rates so they can start borrowing money because they really need to roll over their debt and they really need access to capital. And these companies are really crucial for our cities. So yeah, I do think that the Fed will lower interest rates, rapidly once they plateau, as they've done here. And if they done here, they dropped pretty fast. So I do think that the Fed will drop rates pretty fast once they plateau here. People think like that the Fed can afford to keep interest rates high or even hike them further, but I just don't see it. I really don't. So I'm gonna not focus on these too much and then go back into NIO. So yeah, I do think that we see a lot of similarities in this area and here. So yeah, I would look more into like the technicals yourself and then determine what you think's a good bargain for you personally. I'm not a I'm not a and when you look at the technicals and you really look at things, I would advise that I would just not advise, but I would just, for me personally, I would be better. I would play it more better safe than sorry, right? You know, and you can use that as what you will or think about how you will, but that's just my opinion. Don't take it too seriously, but that's how I would do it. It's just not worth it, in my opinion, to be sorry rather than safe. I don't want to get into too much specifics with that, but yeah, so looking at this board, holy moly, man, I don't know what these guys are talking about, but these guys are insane. So I wouldn't look at these guys for resources, but I did notice that a lot of the old bears and a lot of the old trolls and shorts that were posting have come on recently. Like maybe occasionally I'll look at the messaging board just to see what it is, because just to see who's showing up and like what they're discussing, because I don't really follow this company as much as I used to, since I invested my some and I took my profits, and I have a position where I ride it long, but I never really felt the need to really look at it too much until it came to these prices, because I wanted to add more and find good deals for myself. But yeah, around this price, when the company was trading around these values, and the interest rates were around these levels as well, and looking at the yuan, I don't know, it was around these levels as well. It's really interesting how you see the same types of people pop up, probably because they're probably looking for opportunities just like you and I, or maybe they're shorting the stock, but I don't even know if they're real or not. They could be algos, bots, they could be trolls, or they could be on a terminal board while they're just waiting and killing time, or driving down sentiment. Either way, it really doesn't matter, but it's just an interesting thing to see the same people, the same bears, the same trolls that I saw back then on this messaging board that I did during that peak pessimism, that peak fear. Another thing too is that I don't really go on here either, because every time I go on here, it's just people complaining and people crying, and it's just ridiculous. Like, I don't know. I mean, I understand that there's a lot of bag holders in the stock, so I could see why they're crying, I could see why they're complaining, but I also think that odds are this place is heavily ran by trolls, shorts, hedge funds probably look into this to drive sentiment as well. But it's not like these people are really having discussions about the company or the stock, or really doing a macro to micro point of view analysis while also factoring the company. It's mostly just like really useless stuff. It's really useless stuff that can all be found on CNAV posts. So it's really interesting to me how the sentiment is, not because like I don't come in here to these forums to like find new information. It's all out there, very easy to find. I go on these to gauge sentiment, and then how you can make your own indicator, like, oh, okay, if this, you want to gauge like peak fear, peak sentiment, or over optimism, or just over bullishness, because then you want to play contrarian and be like, well, if you go like on an Nvidia messenger board, everyone's just overly optimistic, and it's just like, okay, this is a pump and dump scheme. Or if you go on like that Trump True True Voice or whatever, that IPO or whatever he just Trump did. It's like everyone's like really optimistic, too optimistic on a company that looks like a pump and dump scheme and has everything that relates to a pump and dump scheme in order to bail this dude out. And it's good because it's like, oh, okay, it just it helps you it helps me personally gauge like peak fear and peak greed. Yeah. And so that's why I like to look at these things, just to gauge if like there's peak fear or peak greed. And a lot of these are probably bots. A lot of these people are probably trolls. And even if they're real people, you guys got to think about it like this. Like these people throw in a couple $100. So I would not take anyone here seriously. Like none of these people, there's no proof that any of these people have invested like $10,000, $100,000. Like I've invested a lot of money in this company at one point, and it's like I have a huge incentive to follow this company when I do. And the more money I throw into this company, the more I'm gonna feel incentivized to actually do research on the company. But dude, a lot of the people are just trolls looking for a buy-in, right? Because everyone's here to make money. So like, let's just look at this one for example. This guy posts here often. I see. Do I believe him that he has 200K of his own money in a company? I mean, yeah, but it's like it really doesn't help anyone to know these things, right? So yeah, I would be really cautious while reading these things, because like there's things like this stock and company sure looks like it's going to zero. It's like, no, it really doesn't. Even if whatever you say, like this company is going to be bailed out by the Chinese government, and this thing has 470,000 deliveries with a market cap of around 10 billion, cash on hand anywhere from 6 to 8 billion, and revenues of around 6 to 8 billion, I believe. And that's going to be growing as well, especially when Fed cuts interest rates. And then you just think about the company in general, like with Onvo, the mass market, the mass brand, and the economy picking up, especially if we lower interest rates, the value of the yuan will go up, and then the purchasing power goes up as well for Chinese citizens, and damn, bam. So it could be why I heard that Li Bin wanted to focus more on the domestic market in China, because yeah, if the purchasing power goes up as a result to the Fed cutting interest rates, or China sells some of its U.S. treasuries, and there's more domestic consumption, then yeah, like the yuan versus the dollar may actually rise, which would help the purchasing power of the Chinese citizens, which probably would be reflected in things like NIO, just in terms of sales and deliveries. This guy says I had around combined 1,000 shares in 2021, average cost 25, sold around 39. I mean, like, some of these people are true, but it's like there's no proof for anything, so I wouldn't really take anything they say with more than a grain of salt. Just like me, like, don't take anything I say seriously. Like, none of these people should be taken seriously. And a lot of people did get burnt, but a lot of these people are new accounts too, from what I've seen. And even when I look at YouTube, it's like there's a lot of people who are really bearish on the stock, and it's like that's a good sign, to me at least, right? Because if you're like me and you're trying to buy this company, you don't want to buy the company when it's like near all-time highs. You want to buy this company when it's trading at all-time lows, and you want to see if there's still value, and if it's undervalued based on your own predictions, and then determine if that's a good value for you or not. So yeah, I don't know, I think for me, just looking at the messenger boards, it's a pretty good indicator that there's a lot of like, I don't know, I would just be doing a lot of research on everything, sentiment, users posting. Like this guy says no, it's not making profit, it's overvalued until it can start reliably making profit. Yeah, I mean eventually, but that doesn't really mean that should reflect the stock's price, right? It's much more complex than that. And so this person just posts on Wall Street bets and posts weird stuff. So, yeah, honestly, this guy's probably just looking for a good opportunity too. Like this guy, okay, this guy posts really weird stuff. He looks at really weird stuff on his. I mean, yeah, this guy plays League, and yeah, I don't know what this guy does, man. He does some weird stuff, but yeah, okay, what the fuck. So yeah, I mean, dude, I wouldn't take any of these people really seriously. Um, I know Wall Street Bets is a troll forum, but yeah, like, dude, this guy's probably looking for a good trade. Like, everyone's just looking for a good entry, right? And that's all we're all trying to do. We're all trying to look for good entries on the stock. We're all trying to make money. So, yeah, I mean, do I think the company is really supposed to be this low? I don't know. That's a really good question. Especially when you compare it to other electric vehicle companies. But don't worry, because something as strong as Alibaba isn't doing too well either. I mean, gosh, look at this company. This is something I invest into, and I was lucky that I bought around here, and then I sold around here. I was so lucky when I sold around here, and then it just tanked. But you know, I guess I was lucky because around this time I sold NIOs too, because I don't know, it's always good to take profit and then take profit on the way down. And then I rebought, you know, around here and here. Well, I bought here, sold, bought here again recently. And it's like, wow, they offer a dividend. They have so much cash on hand. They're selling all their junk assets that they no longer need, like Xpeng or other endeavors that they have or other branches of the company. This company is amazing if you actually look into it. Yet, look at this. It's trading at all-time lows, dude. It hasn't traded this low since 2016. And it's reached lows of 65 or so, which, gosh, you know, this hasn't traded that low almost since 2015. And it's, to me, it's just really surprising because I never thought this Alibaba would get this low. I mean, I use Alibaba, a lot of people do, and if you actually understand the company, or if you look at the financials, it's like, wow, you know, like the book values, gosh, you know, I think it's almost around book value. So, you know, the PE ratio is only at 13. Jeez, it's a really good deal in my opinion. In my opinion, but especially when you start comparing it to United States companies. So another thing too is that when they start lowering interest rates, it'll allow for more money to spread around the S&P 500s and the indices and just the stocks exchange in general. And you know, how much longer can you bet on Nvidia rising, right? Like, let's just say you are an Nvidia investor, okay, and you're a hedge fund, or you're just like an investor, you bought around here or here, okay, and you see this astronomical rise. Okay, you doubled your money if you bought here. You almost doubled your money. So wouldn't you take profits? What are you gonna do? Take profits and then buy more Nvidia? No, you're not gonna take profits and buy more Nvidia. You're gonna take profits and find beaten down companies that you think are undervalued. You know, like your Babas, your NIOs. I don't know. Some people might look at Tesla. Do I? I mean, no. My cost base is around $27 or less, so I'm not gonna do that. But unless, you know, if Tesla, for example, dropped around these prices, you know, then I might consider it. But you know, it's like I would even here I didn't buy because I was just like, well, you know, it's like some people may find it a good opportunity, but based on the market cap and the revenues and the guidance, you know what, I'm just not gonna buy it again because I bought around here, right? So my averages are really, really low for Tesla because I bought Tesla when it was on the verge of bankruptcy, and I bought NIO when it was on the verge of bankruptcy. So it's like my average is so low that it has to get to a really good price to incentivize me to look at the company again. But yeah, if I were someone who invested in Nvidia, for example, you know, I would definitely try to, you know, spread some of those gains around, place bets in other places where I think it's undervalued, right? So maybe diversify a little bit more, especially because it's such a large portion of my portfolio at that point, right? If you throw in a large sum. So I think we'll see some better days, personally, just my opinion. But yeah, after going over the forums, I would not take this place serious. I would use it more as a indicator of like greed and fear. And I would look at the types of posters there are. Like a lot of these bears don't own any of the stock probably, and they show signs that they don't, or they new accounts or things like that. And or they're just they are legit accounts, but it's like they don't own any of the stock yet they may claim to, or they're super bearish even though they don't really care about the company. And that's like, to me, it's like, oh, okay, this guy's probably trying to look for an entry just like me. I mean, why else are you bearish on a stock? Because you think, oh, I think that I want the stock, but I want the stock at a lower price, therefore I am bearish. Or you can be bullish because you're like, oh, I bought the stock and I think it's going to go higher. So yeah, a lot of market psychology when it comes to investing and trading and things like that. So you know what, you can look at the technicals and you can also look at things like that too, right? It's like when analysts lowered their forecast for NIO, it's kind of like that too, right? And maybe they have paid pumpers, maybe they have algos, maybe they have bots that pump negative sentiment as well, just like the news platforms. But yeah, I think it's a good sign when you see more bearish news. If you think the company is going to do better, and if you think that it's undervalued, then it's a good thing in my opinion. Because for me, it's like, if they beat down the stock for me, that'd be a good thing for me personally, right? Because if I'm looking to buy, what am I going to do? Like, if this thing gets to $1, which I just don't see it happening personally, I really don't, because gosh, what would the market cap be at that point? Substantially lower than the revenue and cash on hand. But a lot of Chinese stocks have also been doing that. Like if you look at Douyu, or if you look at Alibaba, or if you look at Zep, I think. Yeah, a lot of these companies are just not doing too well, even if they have a lot of cash on hand. But yeah, so just looking at NIO, for example, it's like, yeah, if this thing reached to around this price, dude, I would dump truck my entire life savings on this thing. Like, holy smokes. I really would. So it's like, yeah, I can be bullish on the company, but if I want a good deal, of course I want this thing to drop further, right? Because I have cash on hand. If I think it's going to go up eventually, then I don't really care how far it drops, because it's just, well, if I have savings, I have cash on hand, then I'll just buy and just wait, buy and hold, and wait for the stock to recover, right? So it's not like I care. And it's like I benefit from the stock dropping lower because it means I can buy more shares for cheap. But not everybody feels that way, right? Especially if you maybe want to leave or take your money out of the stock. But that's just me. That's just my opinion. I think a lot of people feel that way too. I think a lot of people feel similar to me, especially the bears and trolls, because they want to buy cheap shares. It is what it is, right? I never felt the need to do that, but some people do. Kind of weird. But you know what? If they're on a Bloomberg terminal all day, they're probably really bored. Or if they're in like a foreign country where they have nothing else to do, maybe they're bored. So I wanted to get this chart as well. This is a 10-year chart comparison of the NIO, QQQ, Hang Seng, and Baba, and Hanesbrand, because it's another company I've, and I don't know. I don't use bar chart too often, but just looking at bar chart, in terms of the percentage return on investment, in percentages, yeah, the QQQ has done pretty well, while everything else is just not doing that good. But maybe I can look at it closer to get a better thing. These things all generally trend in the same way, except for the QQQ, because they've been benefiting with how the conditions currently are. But everything else, like Baba, Hanesbrand, which is an American company, the Hang Seng, and NIO, just not doing too well. So why did I pick Hanesbrand? Well, Hanesbrand it's an American company. It's an iconic American company, but The company itself is not doing too good. So this is one of those growth, turnaround, spec plays. One of those companies that I think are similar and trade similarly to NIO because of the current conditions, regardless if they're Chinese or not. So I used Hain Brands as a reference point because, look, I mean, God, look how identically they trade. This is why I think that the interest rates, the macroeconomic conditions, the purchasing power of the people within each country, all these other factors matter substantially more for a growth stock. Hold on, I gotta do something real quick. So yeah, for me personally, it's really hard to predict when the bottom is for a stock, but for me personally, determining what's a good deal, um, well, I think these are some of the best deals I've ever seen in a really long time. And if I think it's a good deal, I would wonder for if other people feel that way too. Um, yeah. So it's like you can look at the technicals, right? And you could probably be pretty accurate if you think we're gonna hit a certain number, a price. But at the same time, I don't know if they're factoring in things like, yeah, the interest rates and when they're going to be lowered. So if we do lower the interest rates in Q3 of this year, maybe Q2, late Q2, Q3 ish, and then Q4, if we do lower interest rates 3 times this year, then I don't know. It's kind of like between now and then for me, right? So like if it's currently March 27th, almost April, and yeah, if I think they're gonna hike interest rate, lower interest rates, then I'm kind of trying to determine based on the fundamentals and the technicals and the macro and micro and the macro conditions and just the economic conditions in general, where is the bottom, you know? Anyway, though, that I guess that's just some of the things I want to share. Like I could go over the financials if you guys want. If you guys want that, yeah, just ask and I'll get my own opinions on it. Maybe I can ask specific questions if you guys have any too. I haven't really gone over things like Onvo or the mass market because I'm like, yeah, you know what? Everyone talks about those things, but I want to share some other things too that these people really aren't, YouTubers aren't talking about. Um, I just want to share some points of views, if anything, but yeah. Let me see if I can think of anything else. I mean, I did notice that a lot of these Chinese education companies, they're doing pretty. They're starting to recover, which is a good sign. If that matters to you, but if you use that like as some sort of indicator for yourself, um, here's a company I traded. I was trading options on this company, Meta. And for me, gosh, I guess I should have held on longer, but I ended up buying around here, and it was you want to know why I bought the company around here. It was ridiculous. I thought it was a good deal, right, just based on the financials. And then I saw like all this negative bearish news on this company. I was like, okay, well, it seems like everyone's bearish on this company, even the news media, so time to buy. So I ended up buying calls around this area. I think I sold maybe around here-ish. Maybe here. I forget already. But yeah, I guess I guess if I held on to my options, or if I just, yeah, I guess I could have made substantially more, but yeah, I can't predict that, right? But yeah, you see how like it's not every company that has benefited from the rise in the S&P. It's just like the Magnificent Seven. Like there's Magnificent Seven. There's a few other companies too, like Marriott, things like that. But not every company has benefited. A lot of them have not. And I think that's why I want to use Hanesbrands as an example, as an American company that's just not doing too. Oh, there you go. I can just look at that real quick. Yeah. I think that's why I used Hanesbrands as an example of an American company that's iconic, that's a turnaround player, that's not doing too good, but could benefit from lower interest rates. Like, this company is just not doing too good in terms of the stock's price, but hey, you know, if we see lower interest rates, perhaps we could see better opportunities for this company, because this has a lot of debt. It just sold off its champion segment, and it could really use that. You know, it could really use lower interest rates. Another company perhaps would be, I don't know. I guess I'm just trying to look for indicators, right? Like trying to pick your indicators. These are some of the things I consider. Same with this one. It's like, did this company benefit from pump and dumps and lower interest rates and easy money? Maybe, right? So that's why when you pull out a lot of these companies, they just look the same. At least on the stocks, because in the when you look at things from like a 5-year chart, a lot of them look the same, with differences over time, because there's numerous reasons why. Maybe they're profitable, maybe the market's picked up on them, maybe there's a lot of policies that are helping promote the growth, maybe they've benefited from, I don't know, the Fed some way or another, or things like that. But yeah, I don't know. I don't have too much else to make in this video. I do have a lot of things I would like to talk about, but this is already a long enough video, so yeah, please ask any questions, and I'd like to answer them. I know this was kind of not pieced together. I just want to share my opinions on things, so I apologize for not being well structured. But yeah, I do have a few other videos I'd like to make to discuss like things like trade and what that could mean for Chinese equities, along with how I think the Fed's going to move over time, and just understanding both economies from China and the United States, and some history as well, along with like media outlets. But with that being said, I hope you all have a great day. For me, I'm pretty excited, which is why I'm back into making this video, because I have seen a lot of great opportunities, right? I don't like to buy things up here. I like to buy things down here. Okay? So with that being said, I hope you have a great day, and you take care.